Hey everyone, thanks for checking out another one of our videos. First thing I want to mention is a little plant here was over here and I put it over here. I think it looks kind of cute, but what do you think? Is it cute or is it gimmicky? I don't know. Let me know. But anyway, in this video, I'm going to be sharing about lenders. When you're going to buy a home, a lender is something you're going to need if you're not paying cash. And most first-time home buyers are not buying homes with cash. They are using loans. So you need a lender. Well, it's possible to get approved online via one of those portals, like you're searching and you see this ad for Rocket Mortgage or Better Mortgage or something like that. You can get pre-approved through those, and that can be good for like a general idea of like, hey, how much could I potentially afford? The problem with those things is that they're usually not very thorough. They can work and plenty of people use those, but there's other options that it might be a good idea to consider. So in this video, I'm going to be sharing what a lender does, which type of lender you should probably use, what the different loan types are available for you, at least just generally what kinds are the most common, and signs of a good lender. Make sure you watch till the end because I'm going to be sharing qualities of a lender that you need to make sure wherever you go with as a lender has these qualities. I'm also going to share some tips and tricks that some lenders might not even be aware of that are giving a lot of buyers success when buying a home. If you're thinking of buying your first home and have these kinds of questions, please reach out to me. I have tons of people reaching out to me, asking questions, and I love answering people's questions. So it doesn't matter, days, nights, weekends, whatever, I'll answer when I'm available. But you can either call me or text me. Either way works for me. So what does a lender do? Well, a lender is going to take a detailed look into your financial situation. I shared in our last video about credit and how credit is a tool that lenders use to determine whether you're a good borrower or not. So one of the other things that a lender does, they're going to look into things like your payment history in terms of like how often you've been paid. So your W-2s, your tax returns, obviously credit, and anything else that's going to help them understand your overall financial situation. This is extremely important because a lot of people have different situations going on, like they've changed jobs, they have part-time jobs, they're self-employed, and some of these online lenders might say, hey, you qualify for X amount because you make this much, but there's a lot more that goes into it. So I always encourage people, if you can, reach out to a lender at least 6 months before you're ready to buy a home, because there's a lot of things that could be done on front end to make it much less painful when you're actually going to buy a home. So please take my advice, reach out to a lender. And if you don't know a lender, reach out to me. I'll connect you with a good lender if you're even considering buying a home within the next 6 months. I can't overstate how important that is. Next, which type of lender should you use and what's the difference between the different types of lenders? Well, the first kind of lender is a bank. This is your normal Bank of America, Wells Fargo, something like that. Now, these banks usually have a separate lending arm where they've got oftentimes like a 1-800 number and they can process hundreds and hundreds of loans for the people who are already enrolled at their bank. So it's just like a quick way for them to make money. Now, sometimes you can get better rates with these banks, but oftentimes you're sacrificing the quality, and many times people won't take the extra time and effort to really get to know you and your situation. Now, not all banks are like that. I'm just saying it's something to be aware of. I wouldn't just go to the bank where you have your checking and savings account and see if they can give you a loan. The next kind of lender is going to be a credit union. Now, depending on the credit union, these may actually be a good option. Some credit unions have lenders there who are going to get to know you, your financial situation, and sometimes they can offer really good rates because it's a credit union and they've got a lot of flexibility. So if you have a credit union, you have a really good relationship with them, and the lender there is really good, and they meet the criteria that I'll share at the end of this video, then that might be a good option. Next is retail lenders. Now, these are dedicated lenders such as Fairway Mortgage, Guild Mortgage, Academy Mortgage, Churchill Mortgage. These are all lenders that they have their own in-house loans, and then ultimately they'll go on to sell those to the secondary market, which is like Fannie Mae, Freddie Mac. I'm not going to get into all of that and how that works, but that's what a retail lender is. A good retail lender is going to sit down with you. They're going to meet most of the criteria I share at the end of this video. Sometimes the rates are slightly higher, but if you go with a really good lender, your quality of service is going to be absolutely excellent and is usually going to make up for whatever small difference you might see in your interest rate. The next kind of lender is called a broker. Now, a broker is kind of like a retail lender, but they also shop loans at different wholesale lenders. So there's a lot of lenders that they have really low interest rates. They specialize in the bare bones, and then a broker can look at any of those and they pick the one that works best for your situation. Now, for a lot of people, this makes sense because your fees are going to be lower, your interest rate is often going to be lower, and you usually are going to get high quality of service. So for many people, this is a good option, especially if you are price sensitive and don't want to sacrifice the quality of the work being done. Now, I don't have time to go into all the nuts and bolts of how lending works. That'd be a completely separate video, and honestly, I can get really far into the weeds and I'm not going to. Bottom line is, when you're going to write an offer on a home, the listing agent and the seller want to make sure that you can actually follow through and buy the home that you're saying you're going to buy. What can happen with some of these bigger banks and online lenders is, at the first sign of trouble, they'll just give up. They'll just step away and say, sorry, we can't approve you for your loan, and tough luck. In those situations is when you really want to have a good lender. And it's kind of like insurance. You never know when you're going to need it, but when you need it, you really need it. You don't want your loan for your home to fall through just because you used an online mortgage company that didn't look into your detailed situation. And you often won't even know until you get through the underwriting process whether or not you needed to have someone who looked at all those things or not. The other thing is, some of these online lenders don't have the best reputations. Some listing agents, and myself included, if we see someone and we know that that company doesn't have a great reputation, or we think that maybe the buyer has not been vetted properly, sometimes if there's more than one offer, we'll choose another offer with a better lender, even if the price is lower. So you really have to consider where you're being pre-approved from and how that's going to come across to the seller and the listing agent. Okay, next, what kind of loan should you get? There's several different loan options, and I'm only going to list a few of them because I'm not going to get all the way into the weeds. A good lender could share all the different options with you. The most common kinds of loans are conventional, FHA, VA, and USDA. I can't make that four types of loans that are most common. Most people, probably at least 90% of people, are going to go either with conventional loans or FHA. USDA is more rural. It's a little harder to make that work, but it can work for some people. And VA is if you're a veteran and there's minimum requirements for how long you've served or if you've been deployed. So conventional, FHA, which one should you choose? Well, typically for the people who have excellent credit, conventional is going to be the better option. There's a slightly higher interest rate most of the time, but you're not going to have to pay as much in private mortgage insurance. FHA is designed for people who don't have as great a credit, who are deemed more risky borrowers, and are also first-time home buyers. But the rules have recently changed, and FHA has made it so that the FHA loan is actually a better option for a lot of first-time home borrowers. And just for the record, a first-time home buyer is someone who has not owned a home within the past 3 years. So if you owned a long time ago and then haven't owned for a long time and you've rented, you actually will probably be eligible for an FHA loan. If you have a lower credit, it's almost definitely going to be the right option for you. Either way, a lender is going to talk to you and figure out the best option for you. And lastly, what are the signs of a good lender? First, a good lender is going to do a consultation with you. They're going to look at your entire financial picture. They're going to figure out what your goals are, what's important to you, and they're going to design a loan package that is right for you. This may include paying for points so that you get a better interest rate. It might mean that you take a worse interest rate and have more cash in hand, depending on your situation, how long you're going to want to be in home. Also, if you have other consumer debt or if you have bad credit, they're going to talk to you about all these things, which is why it's really important to start the process well in advance of when you want to buy a home, because there's a lot of advice they can give that if you have time, you can make changes that will ultimately save you money in the long run. Some lenders will even do financial consultations. So they'll help you create a budget. They'll help you do line item by line item. What are you spending money on that you shouldn't? How can you save and save up for a down payment and make the loan work for you? They'll also talk to you about your debt to income ratio, which has an effect on your interest rate and your private mortgage insurance. A super important thing is that they're knowledgeable and that they understand Oregon laws. Someone who just got their license, or maybe they are based out of another state but just happen to be licensed in Oregon and don't really know how things work here, may not be the best option. Along those lines, they should really be knowledgeable about all the different options there are. So for example, buy downs. you can get seller credits and have that buy your interest rate down so that you either temporarily or permanently have a lower interest rate. This is a huge deal. And a lot of people, rather than getting interest rates in the 6% area, they're getting rates temporarily in the 4% range so that they can then refinance once rates drop. It's honestly a super great option, but for people who don't feel comfortable betting on the interest rates coming down, they can do temporary rate buy downs and save money in the long run. So it takes a savvy lender to do all those things and ultimately help you win when you're buying a home. Last but not least is responsiveness. You need your lender to be responsive. You need to have a phone number that you can call them when you need them, and they need to at least be somewhat available on weekends. Don't find the person who's just the 8 to 5, Monday through Friday person, because a lot of stuff happens either on evenings or weekends, and you want to make sure you have someone who's available and that will respond to you and that you're getting the same person every time. Things can go sideways fast, and you need a lender who's going to work hard on your behalf to make sure that you're being taken care of. So what do you think? What kind of lender do you think you would want to use? Or if you have questions, please reach out in the comments below. I would love to hear your thoughts and answer any questions that I can. Also, if you like this video, give it a thumbs up and subscribe and hit the bell to make sure that you're getting notified when these kind of videos come out. We've got tons of other videos on our channel, so you can go and check those out as well. And I'll catch you in the next video.